What's up guys, John here. The infinite chase money glitch was allowing people to go to an ATM, deposit a fake check, 4-figure, 5-figure check, and it would just spit out 20, 30, 50, $90,000 in cash. And these people didn't have the money. They didn't have any money in their bank account, nowhere near what they needed, and it would just spit out the money. And this was called the infinite chase money glitch. It was happening over the weekend. A lot of people talking about this. It was getting hundreds of millions of views. Just this single post here, 5.6 million people watched this video. Look at this. It's a big joke, right? Look, even though this lady's laughing, everyone's having a good old time. Look. But when you look at the real story, what's actually happening, you'll realize that this isn't just an accident. Because when you have Skyrocket Bank, they just issued another outage where it's on payday. The second time in the span of 2 months, people can't get paid.
Scotiabank customers expecting to be paid today were not, after the bank experienced what it calls a technical issue.
So you have this chase money glitch. You have Scotiabank Bank. Then you have Bank of America. You have Warren Buffett, one of the biggest shareholders, unloading billions of dollars in stock, which seems like almost daily, last month and a half.
Warren Buffett's selling spree of Bank of America continues with an unloading of an additional 24.7 million shares, totaling $982 million.
Why would this massive whale unload all this Bank of America stock?
I did think banking could get in a lot of trouble just because of the kind of things that they did. I didn't like the banking business as well as I did before.
You have TD Bank that was just hit with a $3 billion fine.
TD Bank, let's talk about that one as well. It set aside $2.6 billion more for potential U.S. anti-money laundering penalties.
And then you have a consumer that is struggling, to say the very, very least. Delinquencies and defaults are through the roof. Commercial real estate is in very, very, very big trouble. And they tell us that what happens next is a wave of consolidation inside of bank branches and banks. And I personally think that none of this is by accident. I believe that everything's about to change. Everything is about to change with banking in this country. And I believe by the end of this video, you're going to agree with me, because you just look at the facts. The facts tell you the real story. It tells you what's really happening. And then with those facts, you'll be able to make a clear decision or belief based on what's actually going on in this country. In this video, I'm going to do that for you. Please hit the like button. When you hit the like button, YouTube will share this content, educate more people about what's really going on in America's economy. And if you'd like to fix your credit, we would love to help you at my company, greatcreditfast.com. That's greatcreditfast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative or derogatory items on your credit report, go to greatcreditfast.com. Click the link in the description just below this video. Schedule a free call for tomorrow and check our reviews on Trustpilot. Take a look at this. So this is crazy. Look, LOL. So dude tested a scam with a bad 4-figure check, and when it actually spit out the cash, he slapped in a bad 5-figure check. Negative $7,723, and then negative $31,000. This one, negative $10,997. I mean, you look at the views, 1 million views, 220,000 views. It was absolutely crazy over the weekend. Then Goldman Sachs, they said on the 19th of August, benchmark payrolls revision likely to overstate weakness in the job market. Then, 11 days later, Goldman Sachs lay off over 1,300 workers. Let's not forget that Citigroup brought forward something called Project Bora Bora, where they're going to fire 60,000 workers, 60,000 banking employees. Let's also not forget that JP Chase said that, hey, look, bank branch employees and bank employees, we're going to give you a free AI assistant. I believe that AI assistant's there to get trained by that banking employee. And then once that AI assistant is competent and more able to fulfill that job, they're going to let go of a lot of these employees. They're going to start moving everything into AI. It's the same thing with Project Bora Bora. They're leaning heavily into tech and AI. And so I believe that we're walking into something interesting, to say the very, very least. TD Bank stumbles as it accrues $3 billion in charges over alleged compliance failure. When did that happen? About 10 days ago, 9 days ago. Then Warren Buffett, he cut his stake by 15%. That came out Saturday, right? It came out Saturday, right as the chase money glitch was happening. Why would Warren Buffett just continue to dump and dump and dump more and more and more Bank of America stock? Now look at this. August 23rd, 2024, banks are ditching their branches. Maybe you should too. If you're still relying on in-person banking services, it might be time to open an online account. Soon you may not have a choice. That's because the nation's largest banks are shutting down branch locations in droves. Last year, 2,454 bank branches closed, according to the S&P Global Market Intelligence. As of December, the number of bank branches in the U.S. had shrunk by more than 1/5 compared to 2009. More have closed since then, too, between Bank of America, Chase, U.S. Bank, Capital One, PNC Bank, Wells Fargo, TD. Another 400 plus have already closed in 2024. Wells Fargo leads the pack with at least 88 bank closure filings, according to the Office of Controller of the Currency. High interest rates have begun cutting into the profits, which could mean still more Americans see their nearest bank branches close its doors. Banks have recognized that the physical footprint does not need to be as large today. Head of the Financial Institutions Research. As revenue pressures persist, banks likely will continue to shrink their branch network. Now, I believe, why do they need all these bank branches if consumers are broke? Consumers aren't going in there to get out loans because they're not going to get approved for them. They're defaulting on bills left, right, and center. So if you owned a bank, would you want to pay, $20, $30, $40,000 a month just in a lease, plus have 20 and 15 different employees? Right? A lot of these full-time workers, paying them $50,000, $60,000 each, paying insurance, paying all those expenses when you can just automate everything online through an app, and then just outsource a lot of the call centers, to India and to different countries. You would probably opt in for that because you're going to be losing money on these bank branches, right? This is what's happening. They no longer have a consumer that's able to go out there and qualify for all these different loans. And if you look at where the savings rate is right now in America, there's only one other time in history it's been this low. Consumers are broke. So banks just aren't making money off of them. So, they're going to cut services. But while losing your neighborhood branch may be inconvenient, the broader trend reflects how Americans prefer to manage their money. Online banks offer a hand-to-beat combination of higher interest rates and lower fees. As digital banking apps continue to improve, it's often faster and easier to simply pull out your phone for most transactions. Now, it depends on who you are, right? If you're 20, 30 years old, maybe you kind of grew up in the Instagram tech app era. But if you're 55, 60, 70 years old, you probably prefer to go into a bank branch. I know my dad, he loves going into bank branches, right? He knows everyone by their first name. It's almost like a hangout for him. He's always going in and out of the bank branches, and I think a lot of people enjoy that experience. But when you see where this is all going, you'll realize that this is what's happening. It says there's 63 problem banks and $517 billion in unrealized losses, right? That came out June, saying $517 billion unrealized losses. Then they're saying, hey, the short answer is yes. Professor sees $2 trillion in losses on the books. Now, what I find very, very fascinating is this Silicon Valley First Republic collapse, Bank of California getting acquired by, or PacWest getting acquired by Bank of California. All this that happened, these banks were on the hook with two problems. The first is this bank term funding program. They got loans, 1,804 banks across America got loans saying, look, we're going to help you because we don't want to see this wave of bank failures continue to go. And so we're going to give you, we'll lend you $161 billion. And that's what they did. They lent out to 1,804 banks. They lent out $161 billion, $165 billion in loans, right? So they gave loans on commercial real estate and all these different, all these different assets they had that were underwater. They said, look, we're going to give you full face value of these loans. Don't worry, just pay us back in a year. Problem is that the economy's gotten worse and the values of these properties have fallen. And so they're going to have to pay back a lot more money than what they took out. And they're going to be on the hook. I think we're going to see a lot more banks go belly up. This expired March 11th of 2024. So by March 10th of 2025, all 1,804 banks will have to pay back the $165 billion. Big question is how many are going to be able to in this environment? Fed yanks an emergency funding crunch that got too popular at the worst possible time for small banks. Now, this is what they made banks do. On top of this, they said you have to deposit funds. You have to deposit funds in something called a refill a government deposit insurance fund. So all the big banks have to put money in. So Bank of America, their profits shrank as lender took a $3.7 billion in combined charges to refill. So all the big banks are depositing billions and billions of dollars into this fund. Big banks saddled with steep tab for Silicon Valley Bank. Now, as they continue to hit these banks with all these fees, this is where things get really interesting. What they're planning to do to these big banks and to other banks is they're saying, look, we want to prevent these big banks from taking advantage of American consumers. We have to. We've got to combat inequality in this country. And so no insufficient funds fees, we'll take them from $35 to $8, no late fees. We're going to really go after the big banks, really talking to Main Street. And a lot of people listen to that and they say, finally, people have our backs. They're going to help us. But what's actually happening is they're putting more pressure on these banks at a time in which they're going to pay back so much money in terms of either the Bank Term Funding Program, the $165 billion, or this refill of the Government Deposit Insurance Fund. So they're getting hit from both angles. Well, three angles, really, right? So as this is happening, commercial real estate is walking into a really big problem. You're talking somewhere in the range of $2.2 trillion of commercial real estate debt has to get refinanced from now until 2027. The big issue is that 70% of this $2.2 trillion is held by small regional banks. This is a very, very big issue. And I believe we're going to see a wave of consolidation unfold because of it. Stretched consumer delinquency rates for credit cards and auto loans tick up. I mean, look at this. We're, basically at 2011, 2012 levels. You give it a little time. I mean, I think we're going to be continuing to go up there. It's an issue. I mean, look at this. This is the national savings rate in America. This is July 2024, 2.9%. Only in 2005 in that range, it was in that, it was in that place. Everything else was far above where we are right now. Now, the big question is what's going to happen over the next 3 months, the next 4 months? Are we going to walk into potentially a black swan event? At this point, where we are right now in the world, every 3 days, 5 days, 7 days, something major happens. Remember 5 years ago, 10 years ago, one big event would happen, something at a school or something really, really big, where it would be talked about for a decade. It would be talked about, everyone would be talking about it nonstop. Now a major, bank could go under, a major event could happen overseas. It's forgotten within 2 days, 3 days at max, right? Are we walking into a scenario where people are just getting so jaded to where we're going to see a wave of bank consolidations happen so quickly and every single consolidation will be forgotten the next day, right? Are we walking into that type of world and then we'll blink in 2027, 2028 and it's just Chase Bank, Wells Fargo, and Bank of America that are basically, banking 85% of American consumers? Let's have a conversation about this below because there could be massive implications if 3 banks are steering the ship or maybe 5 banks are steering the ship for all of America. Let's talk about it. And if you like to fix your credit to position yourself, what I believe is without doubt going to be the greatest wealth transfer in American history, we would love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative or derogatory items on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call for tomorrow and check reviews on Trustpilot. Catch you next video.